social network right now. We're going to show this conference on stream, but the university doesn't tell that before in order to make you come here. No. But we can start. Okay? So, good afternoon. How are you? Good? Well, it is a great pleasure for us to have you here participating in this conference, small, long, big problem. As you know, financial inclusion has entered into the public agenda of Argentina in the last 3-4 years. In fact, it seems like but we are pretty much agree that financial inclusion is necessary for economic development and social inclusion. However, there are some universities at the world that still critique that sense. Financial inclusion might not be that beautiful promise that we usually listen or hear in the newspaper or radio or whatever. Financial inclusion, as you know, started 40 years ago with microcredit and microfinance. So those 40 years of knowledge and evaluation give us some clues about what financial inclusion is and what is not. Which kind of financial inclusion works and which kind of financial inclusion doesn't work. Since the aim of the universities around the world is to push or enter in deep analysis of the positive but also the negative effects of all the social phenomena, is that we are really happy to have Milford Bateman here today, because he's a global referent about the B sides of the financial inclusion phenomenon. He's critical, and he has also written the bestseller book, Why Microfinance Doesn't Work. Just in order to put all of you and the people online in the same stage, microfinance is the same of saying financial inclusion for the poor. It's the same. That's why we can affirm that we have more than 40 years of knowledge about that kind of microfinance. So, Milford, the class is yours.
Thank you very much.
Present yourself. Tell everybody all your experience and why you hate the financial inclusion, and let's start the debate after your exposition.
Okay, that sounds good. Okay. Right, let's continue on from there. So, let me go to the first slide, and so spoiler alert. It is now widely accepted, even by advocates, that microcredit has failed to address poverty. Okay? You have people like David Rudman saying the impact on clients is zero. You have somebody, Daniel Altman, saying, you remember Mohammed Yunus talked about teaching people to fish and not giving them fish. He's basically saying, don't teach this woman to fish because they get into a lot of debt. And then you have somebody who wrote the textbook on microfinance, the economics of microfinance, saying that basically it just hasn't worked out. So that's really the negative point. That's what I'm going to be talking about tonight. As I said earlier, doesn't mean to say I'm against finance, but I would like to, I take part in the discussions as to what types of finance we need, and that might differ with other opinions about what is the right type of finance. So some of the key issues I just want to quickly cover when we're here in the 45 minutes I've got. I want to look at the spectacular rise of microcredit, how it was supposed to work, what are the reasons why it didn't work, and then something else that Nacho basically wanted me to touch upon when I did a lecture earlier this week. We had a couple of Nobel Prize winners announced last week, and they are very much into evaluating microfinance, so I thought I had a few things to say about that. And why are they arguing that perhaps things are not as bad as critics would be saying? But why was the microcredit movement rescued and taken in by the wider financial inclusion movement? So let's look at the first part, the origins. So maybe this is something new, but the microcredit model basically emerged in Latin America. Okay? And we all know what a microcredit is. It's a tiny loan given out to help establish or expand usually an informal microenterprise or self-employment venture. Now, it was started in the 1960s in Latin America by the US government, and it was more about pacifying the poorer population. So in the 1950s and 60s, there was a lot of dissent among the population. There were radical peasant movements, socialist movements. I'm sure you've all heard of liberation theology, because I think you have somebody who was a professor here who was very much a supporter of that. And so there had to be a way to make sure, or to at least deter the poor in Latin America from trying to overthrow the sort of US-style form of what we call comprador capitalism. So it was a way of offering a little bit of hope to the poor that things might change for them for the better at an individual level, so that they avoided taking part in the more collective movements like liberation theology, socialist movements, the peasant uprisings, all the revolutions like in Cuba. So there was hope that if people individually saw their future as entrepreneurs, they would not take part in the wider social movements, and US-style capitalism basically would be okay. So that was the overarching aim of a lot of the US government experiments, beginning in Brazil, moving to Bolivia and other places. Then in the 1980s, attention shifted to Bangladesh, and I'm sure you all know why. There was somebody there who had been trained in the US, did his PhD, taught in the US, and then moved back, Dr. Mohammed Yunus, who was the founder of Grameen Bank. Now, Yunus essentially promoted microcredit, his version of microcredit, as a way to bring capitalism down to the poor. Okay? So he wasn't trying to change society so much as include the poor as entrepreneurs, as capitalists. And of course, this was music to the ears of the international development community, which became very interested in financing all of his efforts, particularly financing the Grameen Bank. And Yunus's philosophy you can sum up: to end world hunger, don't give away money, just start a business. Okay, and we'll come on to the idea that the historic ways that the poor have overcome poverty are usually collective, through welfare programs, through pensions, through unemployment insurance, through cash grants or whatever, through trade unions. They tend to be collective. He was saying we can get rid of all that and we make poverty reduction an individual responsibility. So that's a very radical move away from the sort of past. So very much the international development community bought into his ideas, and he was able to convince the world that Grameen-type programs will work not just in countries where there's a little bit of poverty amongst fairly wealthy people, but in a massive poverty situation. So he said it doesn't matter how poor a country is, microcredit will pull that country out of poverty. And the international development community agreed with him, and you had lots of Grameen-type clones, Grameen-type institutions being formed all over Asia, and then into Africa and back into Latin America. So basically the advocates like Mohammed Yunus were selling a dream. They were selling the dream that every individual would see their own route out of poverty as getting involved in some sort of small business activity. So this was a new way for addressing poverty. Now there was just a slight problem though, because the Grameen Bank and many others like it were set up with government funding or donor funding. And so even though the World Bank and the IDB and the US government liked the idea of individual entrepreneurship and self-help, they didn't like the idea of subsidizing institutions like the Grameen Bank. They said that they had to be self-sustaining. Okay? So the only way to do that, to make what they called a healthy institution, was to make it a business, to make it a profit, a for-profit concern. And so microfinance, the original model of Mohammed Yunus, was abandoned, and a new model was introduced, which was basically microcredit is a business. And then you don't need to subsidize it, and the governments don't need to do anything for it. And that was the way you were going to get the expansion and the outreach because of the profit motive. And it worked. Commercialization of microcredit led to a dramatic expansion of the microcredit sector in the 1990s and into the 2000s. And pretty soon, many countries, it was ubiquitous. Bangladesh and Bolivia to start off with, Indonesia. And what we mean by that is that every single poor person, if they wanted a microcredit, could pretty easily get hold of one. Okay? So this was a real barrier they'd gone over. That every single person basically who wanted a microcredit was very easily able to get one. That was the holy grail they were after, and they basically started to achieve it. And as a result of this ubiquity, many of the most important advocates of this commercialization approach started to say that, well, you know, we are on the cusp of a major historic episode of poverty reduction in Africa, in Latin America, in Asia, and in other parts, particularly Eastern Europe. So basically, microcredit was a wonder drug. It was the new Zorro, riding into town and selflessly and costlessly helping the poor escape from their poverty and exclusion. So this was something new. This was a really radical, a really popular intervention. But why didn't it work? So there've been some games for the poor. So clearly, I mean, we've all heard and we've all looked on the websites of the main microcredit institutions. Some people manage to do okay. They take a small loan, they open up a little shop, they sell enough goods, they can educate their kids, they might be able to build a house or whatever. It happens. It happens. Okay? Some people with a little bit of land are able to use some extra money and buy some machinery and maybe a little bit of extra land, and they can raise the productivity of that land and they can raise their output a little. Okay? It happens, absolutely. Sometimes people need finance or quick access to finance to build resilience. They need a little bit of money so that they can go because there's a medical emergency or an education problem. So people appreciate the idea that they can go to a microfinance institution and get a little bit of money very quickly. And sometimes the additional supply of goods and services that come into being as a result of microcredit when somebody opens up a business, that can be of benefit to the community. Although I have to say, mainly the middle classes benefit from the increased supply of goods and services. But it soon became clear that these minor benefits, which were all over these websites of the microfinance institutions, were not the full story. Okay? And it soon became clear that those minor gains were being swamped by the downsides, okay? Which don't get as much publicity. Nobody wants to hear them because you're trying to sell a particular model. And there was one event in particular that really shook the economics community and led to a new thinking, a new idea about how microfinance worked or actually didn't work. And this was the initial public offering of Mexico's largest microcredit bank, Banco Compartamos. So this event took place in April 2007, and it revealed, unintentionally, two things. Now, the first thing was everybody, the stakeholders around this institution made millions of dollars. Okay? This was not expected. Microfinance was something about resolving poverty. It wasn't about making millions of dollars for yourself. So this came as a big shock to the microfinance community. And lots of silly explanations as to why it wasn't so bad, and if somebody makes $20 million, then fine. Really, they were on the back foot. They were struggling to account for how could you say microfinance was a positive intervention for the poor when basically people were making millions of dollars from providing it. So that was a wake-up call. The other problem was, though, that part of their explanation or their rationale for why people were making millions of dollars would have been, well, because they're doing so much good in the community, why shouldn't they be rewarded? But of course, when we looked at what was actually happening in the community, we found no evidence of poverty reduction. no real evidence ever emerged to conclusively show that it was having a positive impact. In fact, all the evidence shows that it's been having a very negative impact, particularly in terms of the issue of over-indebtedness. So the level of over-indebtedness now in Mexico is epidemic proportions. The government is thinking about how they're going to deal with this problem. There's all sorts of attempts to try to figure out what should be done about this problem, but the levels of over-indebtedness are still very high. That led on to a new understanding and an open space for critics of microfinance like myself to start to put forward ideas and understand and examine what was going on and come to slightly different conclusions as to what was going on. We had a major impact assessment funded by the UK government, undertaken by Maren Duvendak and colleagues, and it came up with a very negative assessment, basically saying the microfinance idea had been built on foundations of sand. In other words, there's no evidence that it works as a poverty reduction mechanism. Then we started to look at the earlier impact evaluations, which were mainly done by the microfinance institutions themselves. And once you even just opened a little bit the pages of what they were doing, you found that they were all flawed, hugely biased for obvious reasons. And so that had a major effect on people. So let me just then, so what was the Muhammad Yunus made a fundamental error when he was working in Bangladesh. Now, microcredit is about supporting micro-enterprises which in general, not completely, but in general, supply goods and services to the local community in which they live. Okay? That's the concept. But there's a problem there, because even in the 1980s, when Muhammad Yunus was working in Bangladesh in particular, but elsewhere, most local communities in the global south, the problem of poverty wasn't that there wasn't enough things for people to buy in order to survive. There was food and roofing and clothes and whatever. There wasn't a problem with the availability of those things. The problem was that people didn't have the spending power, okay? So it wasn't the fact that we don't say, as it was maybe under central planning, that there simply weren't goods in the shops. There were goods there, but people didn't have the money to buy them, okay? So the problem really of poverty is not so much resolved by supplying more of the simple goods and services, because people still don't have the money to buy them. And so this became a problem for the microfinance movement, because basically you were supporting, and let me simplify it greatly, that you had maybe before microcredit a woman selling with a table selling avocados. And then after microcredit comes into the village, somebody else says, well, you know, she's making a living there. I think I'll get a microloan and I'll buy a table and some avocados and I'll set up in a village and I'll start selling. Okay? Now, what do we think happens? Is it the fact that the woman who was there originally carries on selling all of her avocados and the new person sells all their avocados too? That doesn't happen. What tends to happen is that she sees half of her demand gone, because half of her demand has gone over to the person standing next to her selling avocados. Now that's greatly oversimplifying the issue, but that is the issue. That is the issue. And so Yunus fell foul. He misunderstood a major law in economics, or what we call a fallacy, a false understanding. Now we call it Say's law, but it's a fallacy. It's the belief that supplying something automatically creates the demand for it. Okay? Supply creates its own demand. This is a fallacy we've known in economics for 100 years. And Muhammad Yunus, in a sense, misunderstood that. He assumed that if people were selling new things in their village, that there would automatically be enough spending power coming from who knows where to be able to absorb this additional supply, so that the woman here selling avocados would be okay, and the woman here just now selling avocados would find demand for her avocados, and everybody would be okay. So that was the first a very fundamental misunderstanding in most economies. There's two principal problems which we can see, and even the World Bank in its latest research is now admitting to some of these issues, which I think 5, 6, 7 years ago you wouldn't have got any of the senior economists at the World Bank admitting to any of these particular issues, but they are doing now. The first one is that for the woman who's been here a long time, her turnover, the amount of avocados she sells per day goes down. Let's say it goes from 20 down to 10. So for her, this thing called microcredit is not actually going to do her any good, okay? And for this person here who might have been thinking they were going to sell 20 avocados because they looked at her and said, well, she's selling 20, so I'll buy 20 and sell them. She's only selling 10 as well. So, because you have new people coming into market, turnover for everybody goes down. You split the market between you. Okay? When your turnover goes down, your profits go down as well. So this woman is now made worse off. And this woman here is not doing as well as she expected. Okay? Because turnover is down because you have more participants. The other problem is that because you have competition between them, maybe this woman will say, well, this isn't fair. I'm going to drop the price of my avocados a little to see if I can pull some of the demand back from my old clients. And then this woman here says, well, she's dropped her price. Shit, I might have to do the same thing myself. And so you have increased competition then generally leads to a softening of the price. So the result of that is not very good. So the first thing you have high rates of micro-enterprise exit. In other words, it could be this woman here who says, I can't do this anymore, can't make any money, I quit. Or it could be this woman here who started, gives it a year, and says, this wasn't what I thought was going to happen, I quit. So wherever you have high rates of micro-enterprise entry, a year later you have high rates of micro-enterprise exit. That's Latin America, Africa, Asia, Eastern Europe, everywhere. You also have what we call high rates of displacement. And displacement is when the new person coming in basically takes some of the income from this woman here. Okay? And we call that displacement. Okay? So she's losing out, she's being displaced from the market by this new entrant here. And that's not good, because this person here is losing income as a result of the increased competition brought about thanks to microcredit. So when Mohammed Yunus talked about we would have unlimited increases in employment in these poor economies, he wasn't actually being realistic about it. You might have a spurt of new jobs created because everybody takes a loan. If the microfinance institution comes into your village, you take a loan, you buy a table, you sell avocados. A year later, the market does its business, and a lot of those new entrants are taken out of the market. But there's a second problem, and I've seen this in particular in South Africa after apartheid, that in South Africa, one of the big issues there was unemployment, and they did bring in lots of microcredit to try to create, particularly in the black communities, new businesses. And for a time they succeeded. People were taking microcredits, setting up bars, hairdressing, retail shops, whatever, all sorts of tiny little micro-enterprises. But the problem there was that competition between all of them was so intense that the prices in the local community started to go down, and basically they weren't making any money. Incomes fell considerably in South Africa. I think the figure is from 1995 to 2003, average incomes in the informal sector fell to 1/3 of what they were in 1995. It wasn't exclusively because of competition, but it was mainly because of the increased competition. In other words, everybody without a job set up a micro-enterprise, but because of the competition, and because nobody had any extra spending power, basically you were selling 20 avocados, the next day you were selling 5 avocados. And you couldn't really do anything else because there was nothing else, so you just carried on trying to make a living selling 5 avocados. Okay? So South Africa's the worst case I've come across, but I've seen the same sort of issues in all the other economies. Now, as I was saying earlier, consider Argentina as one of the problems. With all those interviews going on, I just looked at some, and I mean, I paraphrased some of these, but they were interviewing people outside Buenos Aires, and they were saying, what's your problem? What's the problem? Now, the first one is, I think it's a literal, I got that, this is not a Trump type of, I heard this, but I think this is fairly accurate. Turnover down 60% in 3 years, what do I do? And then others were saying, I can't find customers, they have no money, I have no money. We're all poorer today, I have nothing to spend in the local shops, and nobody in my community has anything to spend in my shop. So these are the typical problems of a community where poverty comes in, and we're simply saying, and this is the same, particularly in Greece and Spain and Portugal. So the logic of saying, in that situation, you know what we're going to do? We're going to have a $100 million micro-enterprise fund so that you can set up as a hairdresser, you can set up selling avocados, so you can see that that doesn't actually make any economic logic. Okay? So when you have a situation of real poverty, it doesn't make any logic. There's not that much economic logic to starting new businesses in those areas which are contracting. I saw this in Greece in particular. I've been reading about some of the terrible things about 5, 6, 7 years ago with the Greek crisis. And their micro-enterprises were exiting, were collapsing at a historically high rate. And the EU was coming in with a fund to try to set up businesses in almost exactly the same sectors and activities as those that were actually leaving because there was nobody with any spending power. It was astonishing, astonishing. So that's the big thing. So that's number one. The second problem we see everywhere is that somehow microcredit is now associated with over-indebtedness. This is a problem in Latin America, it's a huge problem in Mexico, it's a problem in Colombia. Everywhere there is a problem of over-indebtedness. And part of the reason is that people are smart in many senses, and they think, and they realise that if I set up a micro-enterprise, I'm really not going to make any money out of it. There's nothing in the community that I can produce or sell or offer that I'll make any money. You know what, I'm just going to take a bit of money, and I need the money anyway to feed my kids and to buy some stuff for the roof or whatever. So there was a gradual move away from the original model of taking microcredit for a business and just taking it to prop up your consumption. Okay? And that's very dangerous. Even though some of the people are able to repay the loans, if they don't have an income flow or a business, they use remittances, they occasionally use some casual labour, or in many countries what we see is once you start to get into debt, you take another microloan to pay off the old one, and you get more and more and more into that. I've seen this very, very bad in Cambodia, where it really is a treadmill of people taking bigger and bigger microloans in order to pay off the one before, and then I don't know what's going to happen. What happens is they lose their house and their land. Okay? That's what happens. Collateral losses. Bosnia is a good example of collateral losses. To repay microloans, they basically end up losing their house. And if you look at the Bosnian newspapers, you have a lot of columns now, microfinance institutions selling off houses that they've repossessed to repay loans that the poor couldn't repay. It's really quite tragic, really quite tragic. So this is creating a new style of fragility in the global south. This over-indebtedness, everywhere it's coming up. And it's a serious problem. Now, going into the longer term, microfinance has a very adverse impact as well. Because the microcredit industry globally is absorbing more and more money from governments, from investors, from banks, and they're putting it into informal micro-enterprises. Okay? But these are the wrong type of enterprises for the community. They are not generally growth-oriented. The woman selling avocados is not going to start to think about opening a factory where she can process it into, I don't know, avocado paste or something like that. Those things don't happen. So what we see happening is that all this money that's being collected is going into these informal micro-enterprises, and the enterprises that have a chance of growing or exporting or really becoming the bedrock of the local community are not getting any money because the money's going to the woman selling avocados. So the formal small and medium enterprise sector in many countries is being starved of finance, and part of the reason for that, not the whole reason, is because so much of that money is going into the microfinance sector because the returns are higher. Women can pay 40, 50, 60% interest rates, whereas the guy with an SME and 10 of his mates thinking of maybe opening up an engineering company, maybe in the first year they can't even pay any loan, the interest back, because they're reinvesting and they need a break even, they need a grace period or something like that. The banks don't want to touch them. Well, you've got something here that can repay, that you can generate a lot of profit on. Why, if you're free to do so, why do you go and support formal businesses which are much riskier and they could pay 10% here? The answer is you don't. You put your money here. And so that's what's happening all over the world. One of the things it's giving rise to is what we call the missing middle, where you have a couple of big companies, state or private, millions of survivalist informal enterprises, and nothing in the middle. It's a huge problem in everywhere where microcredit has become ubiquitous. So what that means is local economies are being dumbed down. They're being dumbed down by microcredit. Now remember, you'll know the history of Latin America better than I do, but the economic model that was in Latin America from the 40s, 50s onwards was called import substitution industrialization, the ISI model. Okay? So don't buy goods from America, try to produce them locally. That actual policy worked for a period in Latin America. It's the reason many countries like Argentina industrialized. And they're not just a simple resource selling agricultural goods. Okay? So that policy worked. It had many problems, but it worked. And in the 1980s, we had a new economic philosophy called the Washington Consensus, or we tend to use the word neoliberalism. And this ISI model was consigned to the dustbin. And they said, no, the state is not going to allocate money to the best businesses. Leave it to the market. Leave it to private banks. And what private banks have done everywhere is funded the woman with the table with the avocados. And the other businesses that require patient help and technical support, too complicated and not profitable enough. Okay? I'll stick with these. This woman can pay 50% a year and very little risk. Okay? So that's a problem. And so Latin America has created, in a sense, a backdraft. Something is really blocking development in Latin America. And don't take my word for it, because the Inter-American Development Bank did a big book. It was about the time when my first book was coming out on this, and I heard from some colleagues that this book was coming out, and they said, you must talk about this book in your book because it fully supports your argument about the problems with microfinance. The problem was my book had already gone to the printer, so I missed it. But the book basically said that the problem of poverty in Latin America from 1980 to about 2008, there was a huge rise in poverty in most countries in Latin America. And the single biggest reason was that Latin America's finance was badly intermediated, it was badly allocated by private, mainly private institutions. And it was mainly intermediated into the informal sector, which is very unproductive, and the more productive formal sector was increasingly shown. Okay? And they said that was the single biggest reason for the rise in poverty in Latin America after 1980. The financial sector was now free of government, privately owned. It could put its money wherever it wanted. And it puts its money where the return is highest. And if the return is highest with this woman selling avocados, that's where the money goes. So after 1980, there was a shift of finance out of more sophisticated, complicated types of businesses, but these are the businesses that create the wealth and the growth, and the money started flowing into the informal sector and self-employment. So that's the single biggest problem, they said. And that underpinned the sort of dumbing down argument I talked about. And the final problem is that commercialization created a disaster. We talked about, I mentioned Banco Compartamos, that was making some serious money out of it. And what we've got is a situation where the poor, the limited amount of money they have in the community, they can now become part of financial circuits which people from outside can start to take the money out of. Okay? So in many local economies, money is circulated within the economy, okay? From households to local firms back to households. But now, and for a long time, in a sense, outsiders were unable to get to the so-called bottom of the pyramid. They could see it there, but there was no way. We can't make any money. We don't know how to get in there, and make some money from them. Now with microfinance, they can. They can set up microfinance institutions and then start to gradually take out the wealth from the community. And you see this everywhere. It's not just Banco Compartamos. As I said, I was working in Cambodia. It's a horrendous situation there. The profits being made by the mainly Japanese or Taiwan or Chinese owned microfinance institutions are legendary, and the levels of over-indebtedness of the poor are now also legendary. So this seems to accord with one of David Harvey's, he's a famous social geographer, who talks about something called accumulation by dispossession. So you're not actually making anything, you're just taking wealth from somebody else who made it before you. Okay, so now the way to make money is not to make anything yourself, but to take the money from people who've already made it. So people within the community are able to pull the money out of the community. So this was my little diagram for Banco Compartamos, because you can see that, they made the Boston-based Accion, which is an investment and advocacy body, made something shareholding. They made $135 million from a $1 million investment. Okay, fantastic. The co-CEOs, we still don't know exactly how much they made. It's difficult to find out. They won't tell you. But most people I've talked to say it must have been more than 10 million each when they did the IPO. A lot of the other Compartamos directors and managers became dollar billionaires. And even somebody whose job it was to advise Banco Compartamos, who was being paid a salary, a woman who was the CEO of Accion was able to award herself another $1 million because why wasn't she going to enjoy take part in the party? But everybody else was getting rich, and why couldn't she? So that was possibly the worst case. There have been other bad cases, but that was one that really created a sense of outrage about the way microfinance was developing. And today, the problem is that the suppliers of microcredit are the ones making the money. We have the phenomenon of the microcredit billionaires. The recipients, the poor, are going into unrepayable debt, they're losing collateral, they're not really being helped to escape poverty at all. Okay? So, and the result of all that is you have problems of microcredit meltdowns because over-indebtedness gets too much, and then there's a big break in the financial system. The state is being called to bail out many microfinance institutions now, so that the owners make money on the upside, and when the downside comes, they step back and the state comes in. We saw this in South Africa. The government had to bail out the biggest microcredit bank there, $1.6 billion. The alternative was to maybe let the financial system completely crack. So they made huge amounts of money on the upside and then stepped back when it all went wrong, and then the state had to pick up the pieces, just like on Wall Street. So I would say that microcredit is a zombie idea. It's proved itself to be a real problem in terms of poverty reduction, but somehow it still carries on. It keeps lumbering into the village and creating havoc. Now, I just added this in very quickly. I'll go over it because Abhijit Banerjee and Esther Duflo, you'll have heard, got the Nobel Economics Prize. And it's interesting because they do have quite a bit to do with the microfinance area. They were supporters of microfinance at the start. They weren't rabid supporters of microfinance like some other academics and particularly neoclassical economists. But they were supporters. They agreed with the idea. And particularly, they got exposure and funding because they were pioneers of this thing called randomized control trials. So this is a methodology of trying to evaluate what the impact of a particular intervention is. They were the pioneers of this. That's why they got the Nobel Prize. And many of their RCTs were of microcredit. But obviously, if there's a problem with these RCTs, if they're called into question, then the legitimacy of their whole careers is at stake. And of course, it's very important that they won the Nobel Prize. So that has created some issues for them. So they have done several things which I find puzzling in order to boost microcredit when really it wasn't deserving of being boosted. And there are two areas where, this is just what I know about, others have other problems with their work, but just two areas where I have a problem because it touches upon stuff I've been doing. So there was a big meltdown in Andhra Pradesh state in India, okay? Everybody piled in, you had 6 big MFIs making millions and millions of dollars. They were moving towards the initial public offering, but then the whole thing crashed because they were over-indebting the poor. The poor were defaulting, there was suicides, it was a complete mess. I remember writing about it from about 2005 onwards and wondering when is it all going to end. We'll talk about that. And they also did some randomized control trials in countries that I know a little bit about. First off, the Andhra Pradesh crisis. Well, this was a classic over-indebtedness, oversupply-driven crisis. Reckless lending. The big six MFIs were all desperate to make money. Okay? First of all, they made it through salaries and bonuses. At one stage, one of the owners of a company called SKS Microfinance became the highest paid individual in India. Okay? But that wasn't enough because what they wanted, after 3 or 4 years, you do the initial public offering, and that's when you really coin it in. He was hoping to make $75 million. Okay? So that was the cause of the crisis. 6 big MFIs, all pumping out money that the poor weren't really requiring. They were hiring people on motorbikes to go around houses and knocking on doors saying, you need another one. I've got 5 already, we'll take a 6th one. And it was a real over-pressure selling, creating crisis. It could see it was coming all the time. The problem was the CEOs of these big six were rich, and they were powerful, and they were able to hold off regulation, hold off changes. They didn't want to do anything about it, just like in the States with the subprime. The big banks were able to hold off legislation, don't change anything, and then the whole thing just collapsed. There was a mini crisis in 2006, but even that didn't stop them, because they reorganized and moved from the rural areas and started to over-indebt people in the urban areas. The key thing was growth, growth, growth. So finally, by late 2010, when the situation was clearly, what the hell is going to happen, the Andhra Pradesh government finally got its act together and passed an ordinance, a law that blocked any further lending. It killed the microcredit market pretty much overnight. Okay, so they can be blamed for perhaps doing something that was a bit too much shock therapy and not enough therapy, but they had to do something. But what I found strange was that Banerjee, Duflo and others, including the head of the Reserve Bank of India, future head, Raghurajan, they were desperate to somehow still legitimize the microcredit model. And so they had to, how has this happened? Was this the fault of microcredit? And they basically created a completely false narrative around this and said the state was the guilty party here. And what they said was that the ordinance passed in October 2010 was what did the damage. That was what created the crisis. So they ignored the previous 10 years of reckless lending, of over-indebtedness, of suicides, of all sorts of problems which people like myself were looking at, reporting on, analysing, trying to understand. All that 10 years was gone, and they focused on that one act by the government and said the government did it. Wow. Wow. This was a crisis of government intervention, not flaws in the market model. But this was a response to the crisis. This didn't create the crisis, okay? It was totally illogical. And the comparison is the financial crisis on Wall Street. And in October 3rd, when things were going nuts in Wall Street, the government passed the Troubled Asset Relief Program, which was designed to try to do something about the crisis. But it didn't create the crisis on Wall Street. It was a measure, might be good, it might be bad, we have an opinion on that, there are different opinions. But it was a measure designed to try to resolve the crisis. It didn't create the crisis. The TARP was a response to the mounting crisis, not the cause. So I found it astonishing that they were blaming one law on what had happened over nearly 10 years. They just had that. It was very strange. So that was the first thing. The second thing is they set up, under Abhijit Banerjee, a set of 6 randomized controlled trials in various countries. And not surprisingly, the results were fairly positive. Not brilliant. They said microfinance sort of works. But one of the claims they made is, but the claims of critics that microfinance can be destructive, we do not find proved. They never said who the critics were. Could have been me, could have been other people I know, but they just said their main conclusion was that microfinance was still useful, and we should not abandon it, and we should not believe that it would be destructive to the poor. But some of those RCTs were done in areas I study. I live in Croatia, but I've worked a hell of a lot in Bosnia. And the Bosnian RCT was for me astonishing. Almost everything bad that happened in Bosnia, because Bosnia had a rise and then it had a catastrophic fall. Nobody talks about microfinance in Bosnia anymore because it was such a disaster. None of the bad things were included in the RCT. I couldn't find anything about the meltdown, about the fraud, about the over-indebtedness, about the collateral and the guarantor losses, people losing houses. The other thing they did was you needed 2 people to sign when you got your microcredit who would repay if you couldn't. And so people were not able to repay, and then the banks, the MFIs, were going after the guarantors who were paying out millions of dollars because of their friends or family weren't able to repay. None of that was mentioned. And they gave a guardedly positive evaluation of microcredit. Same thing happened with the one in Mexico, Banco Compartamos. None of the over-indebtedness was mentioned in the report. The lack of poverty impact was not thought important enough to discuss. The huge profiteering by those people that was not considered important, even though inequality in Mexico was given a significant boost by this, the way they were working, and of course issues like trust were thrown out of the window. The final one, and you should look at this, I was astonished when I saw it just a couple of months ago. The title is called Lies, Damn Lies and RCTs. It's by some guys at the French Development Agency who are looking at the Morocco RCT, and they came up with the idea that it was essentially worthless. I've never seen an article that is as aggressive as that one, in a sense saying this RCT was horrendously flawed and biased and deliberately manipulated to try and come to a positive conclusion. So why did they do this? Why would this happen? Was it because of accidental errors? I don't think so. Was it incompetence? No, of course not. These are world-class econometricians and economists, so that's on it. This is just another example of economists who have an ideology we call it neoclassical economics, so you believe in markets and free enterprise and all that stuff. And when the reality doesn't accord to that, you falsify the reality. Okay? And there's a long track record, a great paper by Maren Duveneck and Kate McLean about how this happens. So that's what we see, that's what I see, and I think they defend the concepts of neoclassical economics, even though their models are not an accurate description of capitalism. So finally then, so microcredit, I would argue, has failed as a development and poverty reduction intervention. But it has to be rescued because of two things. First of all, the ideology. Now we know the Washington Consensus and neoliberalism is about individualism. Individual entrepreneurs are supposed to be the creators of everything good. So how can we not be in favour of microcredit, which supports individual poor entrepreneurs? We have to be, because if we're not, then it basically invalidates our overall ideology where we say that everything good comes from individuals. So for ideological reasons, we cannot say anything bad about microfinance, because it would invalidate our entire ideology. Second, and much basic, much more prosaic, tons of money are being made in microfinance. And all the big microfinance institutions and the banks who are involved, and microfinance investment vehicles and the hedge funds and the pension funds who are making billions of dollars have gone to governments and the international development community and said, you've got to keep this open. Okay, it might not work, but we are making so much money, you have to keep it open for us. So no talk about getting rid of microcredit. Okay? So what do? Well, the remedy is to basically take the microcredit model and take it into another model, another narrative. Okay? And they call this new narrative financial inclusion. So they wanted to keep the microcredit model working, but just not to refer to it as microcredit. So if you look at World Bank documents today, you will be hard put to find the word microfinance. It's just disappeared. Okay? It's now all about something called financial inclusion, but when you look at financial inclusion, 95% of what they mean by financial inclusion is microcredit. Okay? So it's what I would describe as a witness protection program. Okay? So you want it to be anonymous, you have to put it under a different name, and it can still operate. But no critics can attack it because now you don't even know where it is. We can't criticize microcredit or microfinance anymore because, oh, that's gone, Milford. No, it's gone. It's gone because it's gone into financial inclusion. So just very quickly on this, there are great expectations about this new narrative called financial inclusion. It sounds very progressive, and I agree the poor need financial services, there's no doubt about that. As I say, microcredit's the dominant component of financial inclusion. But we have to ask, if microcredit wasn't a driver of poverty reduction, why is it going to be within the financial inclusion narrative? And rather awkwardly, if you read all the studies of financial inclusion, you can't come up with any mechanism how it's supposed to address poverty. It's very, very strange when you look at studies by McKinsey and Ernst & Young and the Center for Financial Inclusion, and they talk about microfinance, and the assumption is about financial inclusion. The assumption is made that it creates all sorts of good things. When you read through, okay, I want to know how, where's the mechanism? You read through and then it's nothing there. It's an assumption. It's astonishing. It's astonishing. It's blind faith in the idea, okay? So that's a very interesting cartoon that I came across. So basically there's lots of good econometric work either side, and the assumption is that somehow it's going to create a miracle. It's going to do good things, but they're not very specific about what actually happens in the middle. Okay? So I think at the moment it's entirely evidence-free. They did friends of mine, Dakin Maid, a filmmaker of mine, did a study of most of the work on financial inclusion, and they came out very critical. They couldn't really find anything substantive, and they warned against another bout of unrealistic hype. Even the World Bank's own independent office of evaluation doesn't find anything really powerful about it. Basically not saying anything really positive about it and being a little bit mealy-mouthed about it, but basically they're not saying it's going to be the next best thing. So we're into an uncertain future at the moment, I feel. One of the things that really upsets me is that when you look at the history of how we in other countries resolved poverty, okay? When you look at it, or when you read Thomas Piketty's book, okay? You get some indication from that. His book on inequality, you might have read that. Most people have read it, you've read the 10-page summary. It's a 700-page book. But when you read how we, in some countries, resolve poverty, we did it mainly through what I was talking about earlier, collective methods. Okay? One of the single biggest methods that we were able to keep wages high in Europe and the States and also trade unions. Very simple. They were the single biggest reason why wages kept in line with productivity. And when trade unions were effectively banned in the States, you saw wages flatlining even though productivity carried on up. Same happened in UK. Same happened in a lot of Western European countries. Okay? So we had pensions, we had unemployment insurance, we had free healthcare. All those methods were collective. We got together to resolve poverty. We're getting rid of those now. We're getting rid of those now. And the only way you're going to resolve poverty is as an individual. Okay? Just start a business. And if you don't, well, maybe you don't mind being in poverty. Maybe it's your fault. And I can see this happening when you read the newspapers and you see commentators that, well, you've got a microcredit, what's your problem? I hear this when I do field work. In Colombia, we heard it, that somebody confided in me, there's no poverty in Colombia. We just have lazy people. They have this thing called microcredit, but they don't want to use it because they like being in poverty. They like the cachet. I'm poor, I'm not a big oligarch, I'm poor, I like it. I'm listening to this woman and thinking, what are you talking about? Yeah. But she believes it, and it gives her, in a sense, it legitimizes her lack of care for the poor, or lack of feeling. If they're really struggling and it's difficult for them to say, that's bad. But if you could say, but I would like to care for you, but you have a chance with microcredit and you don't take it. And even if you take it and you fail, maybe you didn't work hard enough. So really, I don't have to feel any sympathy, and we're not going to have any policies that'll deal with this, because that would mean taxation on me in my company. So that's the reason. That's what you see when you open the Financial Times or The Economist or others. The rationale of how things are moving now. It's all down to the individual. And if you can't escape poverty, then it's your problem. Don't put that on to me. Don't ask for higher taxes or healthcare or any of that stuff. It's within your power to do this on your own. So don't ask for help from anybody else. So I think that's a huge disempowering aspect of microfinance. Okay, conclusion. So I think there's no real evidence, as I've said, to confirm that microcredit or its, what came after financial inclusion has worked for the community overall. Yes, it's helped a few individuals to do well, but so does the lottery. But we don't recommend the lottery be used as a way of getting out of poverty, because that would be silly, because only 1 in 1,000 win. But yet, only 1 in 1,000 micro-enterprises, maybe not 1 in 1,000, but as I say, the exit rate is high and there are all sorts of problems. So the concept is persisted with because of elite, ideological and profit-making reasons. And sadly, there's an effort to support this by academics and advocates to try to put a gloss on the bad news, to say it's not as bad as that. The critics are not right. We shouldn't abandon it. We weren't wrong in doing it because it's had some positive effects. And I find that rather disturbing. And so when you hear that the people are in poverty, well, they'll let them start micro businesses. That's the new slogan of governments. They're not going to do free healthcare. They're not going to fund education. You don't get any money if you're out of work. This just start a business, and that's all you're getting from government. So I end on a very bad note, but I hope you got something from that. I mean, as obviously you can see, I'm a critic of microfinance. It's not all what I do. I also work in local economic development, and I work on issues like finance, but on what I would call good finance or positive finance. I'm not against microcredit per se, in the sense that everybody needs a small loan, but it's just how it's structured. As I was saying, there's been efforts in Croatia to try to set up credit unions owned by savers, so they can take loans very cheaply, save very easily, and if there's any surplus at the end of the day, it will be given back to members. That's a fine idea. We need to really support those. I'm involved in a project now where we're looking at comparing Cambodia and India, and maybe looking at some ideas about maybe these should be the way that you provide sustainable finance which builds sustainable communities. So I'm not against finance, but I think there's a huge debate to be had here about how you provide finance to the community. And I think that's where it's very interesting. I think that's where the debate is going.
Thank you very much, Mike. So we open a space for questions. I will start. So there's just 9 RCT studies about microfinance around the world. Is it true that they didn't find a direct impact on poverty?
No, I was talking about a set of RCTs, a set of 6 RCTs which were headed up by Abhijit Banerjee, and they came to some modest conclusions. There was something in it, but it wasn't a magic bullet, but we shouldn't abandon it, and the critics who say there's a destructive side to microcredit are wrong. So they're just 6. Lots more have been done, lots more, but all came out with a lot more positive evaluation of microcredit. What was interesting about this set of 6 was that they didn't say great things. This was the first time that they were saying, well, actually, there are problems, there's no real evidence that they're making transformational impacts, but they're still making some positive impacts. So we weren't wrong in saying that there was good things about microfinance. It just, that they just weren't as powerful as perhaps we all expected. So that was what was interesting about these RCTs, in the sense that they played down the sort of celebration that microfinance will change everything. But what I found disturbing about them was that they basically, just to come even to the result that there was some positive benefits, they had to distort the entire production of them. As I say, I studied the Bosnia one very carefully because I work a lot in Bosnia, I used to do, and I couldn't recognize what they were writing about. And I had some communications with them. I mean, what the hell is going on? I mean, it was quite tense at one time. And then the Mexico one, I was also working in Mexico, and I heard from friends who were working on that project who said, I don't know what the hell they're going to do, because the raw material doesn't say anything positive, but the eventual RCT came out with, well, you know, it hasn't been a magic bullet, but, you know, people appreciated it, we should continue and change this and change that. So that's what was interesting about those 6.
But in those 6 studies, they didn't find a negative impact, or did
they found that, well, they found that the positive impact wasn't as big as we previously thought. But on the issue of was there a destructive side to microcredit, they were very clear. We find no evidence for that. The critics say there is a destructive side to it. We find no evidence of that. And what I've had a problem with that was that they didn't say who the critics were. One of them might, some people have said one of them might have been me. But they didn't say who they were, they didn't cite their work, which is usually how you do it, because if you come to those RCTs and say, oh, you mean there were critics? Who are they? What are they saying? You wouldn't know. And it's just, not how you present. That was done deliberately, and I've seen this in so many areas where they say critics are idiots. And okay, well, who are the critics? What are you citing from them? And what is their argument? And if on occasion when I say about myself, Bateman says this, and this, and that's not anywhere near what I say. You know, so it was very sad that they were attacking the critics and said the evidence, the contention made by some critics that there is a destructive side to microcredit, we found no evidence for. But looking at that, not knowing what the real situation was, you wouldn't know who the critics were, you wouldn't know what their argument was, you wouldn't know how they were able to say their argument didn't hold any water. They just said, the critics, you should just dismiss them. And I found that's not how you do research. I was not taught that was how you do research. If you put somebody's argument, you put it forward, you cite it, so that somebody can go and find out what that person is saying, and then you take it apart. But you can't just say that somebody out there is saying crazy things. You don't need to listen to them without actually saying who these people are, what their arguments are.
But so my question is, I mean, taking apart the ethical part of saying something and after some years saying a more different thing. But in fact, we do not have negative or positive evidence about the impact in microfinance.
We have, I don't know, I think
we do not have positive evidence, but we don't also have negative evidence.
Well, no,
apart from the crisis of Bangladesh, the case of Compartamos.
Yeah, that's a bit
yes,
like...
but the capitalism has much more crisis than the microfinance.
But saying that we don't have, I mean, that's a bit like saying, I mean, Wall Street works fantastic. I mean, okay, if you forget 2008, Wall Street works great.
Like a little thing.
You know, I mean, that's not a little thing.
Yeah, of course, but it's not an entire lie. That if you have a system which have crisis, of course, but it's the best one that you have until now. So I think that the point should be, which would be the proposition. So when I listen to you and you finish your speech speaking about the cooperatives, that in a theoretical framework they are very good.
In a practical framework.
In a practical framework in Argentina, and in Latin America.
I know Argentina. Part of the reason I became very critical of microfinance is that when I was doing my doctorate and then afterwards I ended up working a little bit, quite a bit in China, okay? And I was looking at the Chinese model and then the Vietnamese model and the Asian model as a whole. And I've got an article coming out on this, that, you know, if you want a model of how to allocate finance, you cannot learn any better than looking at what the Japanese did, and the South Koreans did, the Taiwanese, the Chinese, and the Vietnamese. So if you want to know how we should allocate our finance, you need to look at the Asian model. Okay? Or you could go back in history even further, look at how the Germans rebuilt after 45, or the Italians in the northern part, or the Basques in the fantastic financial models. So there are financial models out there where finance very clearly had a lot to do with development and poverty reduction. So we know that it works if it's structured. Now the Japanese model was copied by the South Koreans, and then the Vietnamese copied that model, then the Chinese copied that model. So they all learned from each other of how it worked in the East Asian miracle economies. So there is a huge amount of evidence of how you should use finance. And then you can compare that with let's say, the countries that didn't take part in that for whatever reason, for political or elite reasons. Cambodia was one of the ones left behind. They didn't have an East Asian miracle. They had a different financial system, which was just private banks, as we've seen microfinance. Okay, they're doing okay now, but not because of microfinance. And the same in Bangladesh. They went down a different route. And I talked about this the other day, but one of the things that really made me want to look at this issue, which really turned me on, was when I was working at the OECD in Paris in 2000. I was just there a year, but I was doing the local finance in the Balkans because I was a Balkan specialist. And I was asked to come down and talk because we had a delegation from Vietnam there. And I was the local finance guy, and they said, go down and give a talk and talk to them. Oh, Okay, so I went down. What was interesting, we had some ministers there and everything. In the coffee break, they talked, and I said something a bit negative about microfinance. And we talked a little bit, and they said, it's very interesting, yes, I agree with you, because when we were starting our transition from central planning in about 1986, a new system, we actually invited Professor Yunus to Vietnam. He had his model, and he came, and he was very gracious, and we had a nice time, and he talked, and he said this, that, and then they said, thank you very much for coming. But we cannot understand how that model will develop our economy. We do not think it will lead to the sort of outcomes that we want. So thank you very much for coming. But we're going to go down a different route. And they went down the Chinese route, which was setting up particular, mainly state-organized bodies, which were providing not microcredit, but small business credit. And that was the fundamental difference between, in a sense, Bangladesh, where the average at one stage was about $158 per loan, where in Vietnam it was something like $2,500. So you had, in Bangladesh, the woman with avocados, but in Vietnam they were getting money for a tractor, or for some irrigation, or for, in other words, they were building businesses with the potential to grow. Whereas in Bangladesh, they were spending out so much money for tiny little basket makers or whatever. And that was how the Vietnamese economy grew, and they learned from the Chinese, because the Chinese did the same thing. Rural credit cooperatives and urban credit cooperatives financed the first real businesses in China after the collapse of communism, or the collapse of central planning. Okay? That was where China really grew from those origins. And they were funding businesses with technology, with export potential through Hong Kong, and that became the foundation of the Chinese miracle. So those Vietnamese people I talked to in the OECD, that they decided to take a different method, and of course at the end of the conversation, thank goodness we did. And that made me think, wow, that's something to really think about. They had the choice to go down a microfinance route, which Cambodia, Bangladesh went, or more Chinese, Vietnamese, South Korean, Japanese route, about trying to use your finance through different institutions and make sure it goes to the businesses that can grow. Okay? We know roughly the factors that businesses have to have if they are to grow and create and develop and create poverty, reduce poverty. They have to be scaled up, the potential to scale up. They have to use some technology. They have to use training. They have to be innovative. They have to be able to subcontract with bigger companies and work with clusters of other companies. Those are the types of businesses that we need to identify and begin to support, not the informal micro-enterprises selling avocados. So that's the secret of the Asian miracle, and it comes down to finance. So that's the question when somebody will say, well, microfinance didn't work, well, what's the alternative? Well, there are lots of alternatives.
Yeah, I know there are a lot of different alternatives in finance, but I still think that if we have 6 randomized controlled trial studies, so we have to test 6 different ways of microfinance.
6 different countries.
Yeah, but in each country with one kind of program, because it is not the same speaking about individual microcredit, that group microcredit, that giving financial inclusion or business education or health services. It is not the same to speak about microcredits in urban areas or in rural areas, just to women or just to men. It's not the same if you have a roof in the interest rate, as we did have here in Argentina 3 or 4 years ago with one part of the government. It's not the same if it is from NGOs or IMFs or from the banks. Yeah. So I agree that we have no evidence, but I don't see why it doesn't have evidence yet means that we need to close the debate and say it doesn't work.
No, but this, I mean, there was, how long do you keep on trying to find evidence that something works? I mean, most people have gone past that now. When the leading advocates from 20 years ago are all now saying, it didn't work. Okay, it didn't work. I mean, there comes a point where you say, okay, stop with it, the discussion is over. this is what we should be discussing now, is where do we go now? So do we go down the sort of Basque idea of these community, a community development bank? Do we go down the Japanese model of municipal banks and a central bank? Do we go the German model of cooperative banks? I mean, that's where the debate, in a sense, should take off now. That's what I'm finding really interesting, is that there is an opening now, and the debate about what is the alternative, and how do we restructure finance, particularly after the events of 2008. Nobody can really have that much confidence in conventional, commercial, for-profit financial institutions. No, I mean, that really showed that they can do some good, but my God, they can do some damage. So really that opened up the field now for much more discussion about what needs to be done and what sort of financial institutions do we need. And there is a lot of discussion about this. In the UK now, we might have a government with Jeremy Corbyn, for example, on the left, and he's got all sorts of ideas of new types of financial institutions, an investment bank, a green bank. Other countries have got the same. So there's lots of new discussions going on about where does finance need to go, what sort of financial institution do we need. But I think the idea about microfinance, I think that story is done. When the leading advocates say, okay, it didn't work. Okay. Well, we had good intentions, but it didn't work. Then we need to say, right, okay, let's start to think about what comes next.
And they change, as you said, when they shift from microfinance to financial inclusion. And I have a question for you, just in order to listen to your opinion, because you were speaking about the Chinese model. And right now, the fintech revolution is raising the flag of financial inclusion and social inclusion through digital financial services. So, do you think that it is another way of saving this same way of thinking microfinance, or it is a different way who has learned from the mistakes of microfinance and is bringing services in different mode? Because in China, at least, it's great.
Well, I was just reading literally this afternoon that the Chinese are shutting almost the entire P2P sector because they have overlent and lost too much and defaults. They're shutting the whole thing down. Which makes me think that, well, they got that right. You know,
70% of the economy is
just say, right, that's a disaster, they're pretty much shutting it down.
They are building their own digital currency.
Well,
they are digitalizing all the economy.
Yeah,
more than 80% of the transaction done by digital financial services. Of course, you will have bad stories and cases of over-indebtedness, but
no, I mean,
general terms.
fintech, that's another area I've been writing a little bit about, because we've been looking at the most famous example of fintech is M-Pesa in Kenya, which everybody talks about. So we've been writing a few things about that. If you go onto ResearchGate, you'll see we've got an article out on that where we contradict a lot of the research that's been done, again, by people around Banerjee and Duflo, and they've come out with great things. And when you actually look at their evidence, there's not actually anything there. And they do this problem called, this technique called distortion by omission. You look at something, you look at all the good things, you collect all the good things, and all the bad things you don't take. And so you've come up with a really nice evaluation of it because you've left all the bad things apart. So we're finding that. But I think the fintech is now in Africa, is becoming a problem. In Kenya, it is a serious problem. There is huge over-indebtedness because 5 or 6 taps on your button, you've got a $500 micro. Why would you think other than that would create a problem? They had a huge gambling epidemic, still have, and the government, partly we were told, because we produced a paper and it got a lot of coverage in Kenya, and one of the things we flagged up was the way that M-Pesa is an entry point into gambling. Okay, you get loans through M-Pesa and then you can instantly push it onto the gambling places. We said this was a problem, and then 3 or 4 weeks later, the government has now banned gambling on M-Pesa. It's created a huge issue. And you know, they know there are problems there with that, with fintech. So, I mean, there are good things that can be done through fintech, and we've discussed this. And I worked a little bit on some projects in Croatia, working with a wine cooperative using something like fintech. And it was fantastic. It was a way of getting all members in touch with the head office when fertilizer arrived, making their payments, etc., etc. That was great. But when you have a mobile phone where you can, on 5 touches of a button, you get a loan, I mean, that's absolutely, you know. And the other problem I have with fintech is now, you can be taking money from somebody in Silicon Valley. And all they're interested in is repayment. They're not interested in the business you have, so they have no idea what your business is like. Now, one of the successes of Western banking, 2 successes. One was in the UK and parts of Europe, we had what was called relationship banking. That was where the bank manager knew you. You went to the bank manager, he knew what you were like, were you reputable, your business idea sounds good, or maybe not, you want to do a hairdresser, we're just talking about this, hairdresser, there's already 5 in the town and I know they're not making any money, so really that's not a good business to be in. And the bank manager knows that in Italy they call it the theory of the local bank. Because that knowledge, that cooperation, that trust in the village, in the town is very important. So that's going to go completely because somebody in Silicon Valley just wants to know how many Facebook likes you got, are your parents well paid? They just want to get repaid. Whether the business collapses or not, whether it's not good for their economy, they don't care. So that's one model that is now going to be pushed out of view. Then the other model, the East Asian model, which is the development banking model, fantastically successful. There are no examples of countries that have developed without utilizing the most important aspects of the development banking model. Development banks don't always work, but we've no examples of countries that have developed and reduced poverty without a development bank. But if you bring in fintech, the development banking model now goes out. And all money now for businesses will be decided from Silicon Valley or the City of London or from Beijing or Shenzhen or Frankfurt. I think that is an absolute disaster waiting to happen, to be honest. I think it's just a disaster.
So you're talking here like this whole fintech or access to financing is a tool. Okay. If we take it granted like it's a tool, we shouldn't be worried about the people that having access to this tool. This is why people get over indebtedness, and there's the problem. It's not that the fintech uprising is or the new ways to get finance, like more technology or any ways different like the old ones, like all banks do. The problem is not that in the tool, I think. That is the access. Yeah, it's a way, and how I think state does have a regulator over this business, or I don't think it's over the tool the guilty of the people having this problem. I think it's they do not know how to deal with this debt. They do not know if it's okay to get into that debt. They do not have the education, the financial education.
Well, I think you can't blame the technology. You can't. No, I agree with that.
It's an access.
It's a way of accessing. So if, for example, a financial cooperative used fintech to give a better service to members, I don't think that's a problem. In Italy now, some of the cooperatives are moving into that. That's fine. But the problem with fintech used by private entrepreneurs is that the way to make the fintech profitable is you have to build scale. You need lots and lots of people.
I know,
and that's the problem, because the incentive is to just expand and expand and expand, and then in 5 years you do the IPO, you sell it to Goldman Sachs, and you walk away with $1.5 billion. So that's the problem.
You said it would be the same. You said like it's the kind of to be the same of microcredits.
It's microcredit on steroids.
But I have a question here is that if we look for that, we won't be able to renew the ways to give to financing to the people, access to finance to the people. So we should rather have interest to regulate from the government this kind of access, we should. What's the solution? I see the problem here. I see that the people get over the debt and can repay because they're selling avocados is not rentable or profitable to pay back the loan. So how we can assure that they make a good decision, or where the bank investor or the finance enterprise?
I mean, it's very difficult because, I mean, you take the M-Pesa example. I mean, over-indebtedness in Kenya now is a national problem. It's an emergency. And M-Pesa has got a real responsibility for that. But why have they got so many people into such debt? Well, then you look at their 2018 profits, $620 million. That's for the parent company. But 40 to 30% of that is M-Pesa. So that's why they've done it. And so they are powerful. With that money, they can, you know, push the Kenyan government away and say, you leave us alone.
Okay, that's because Kenyan government didn't put a stopper on their policy of financing.
Well, not just that, but a lot of other governments have not been able to do it because fintech, you know, it's a new thing. They're very powerful. They're very, you know, they're very articulate. Governments are not able to push back. I mean, we were talking about something here at the G20. The policy proposals coming out at the G20 are in favour of financial inclusion and fintech. You have to look at who actually writes those policies. Now, the G20 policy on financial inclusion, I happen to know from some inside people, was written by Citigroup. By Citigroup economists in May. So that's an issue. Yes, sorry.
When you speak about these cooperatives or these groups, how do they work? These positive alternatives that you're mentioning, I imagine that they're not the same as banks, they're not the same as these microcredit institutions. So do they know each other? Do they, for example, my friends and some other people, we gather and we start offering our services. I don't see it as something that could work in our society. It's like it feels like utopia in a way.
Well, I mean, I don't know that much about Argentina, so I can't make, you know, but I do know if you go a little bit north, you go into Brazil, and in the southern part of Brazil, they have got two of the best functioning financial cooperatives that I've ever heard about. And I gave a talk up there a while ago and met those guys and talked about how they were operating. They were started quite a while ago by immigrants from Germany and Scandinavia. They have built up these institutions. They don't push loans onto members because they are there to serve members. So they have a completely different incentive structure. So they're big enough to be sustainable and they generate a surplus, but they didn't get to be big by desperately finding clients and getting them into debt so that they could grow.
Do you remember the names?
One of them is Socredi.
Socredi.
Socredi. Yeah. The other one.
Radeco, isn't it?
Sorry?
Radeco?
I don't know. Socredi is one of them, but there are two, and they are really important examples. But you could also go to northern Italy, and they were fantastic there. I mean, it was one of the reasons why, after 1945, the northern part really boomed because the financial cooperatives were able to get started again after the war. People had trust in them. They put their savings there. They were able to generate funding and then provide that funding to businesses in the community with growth prospects because they were members of the community.
Yeah.
They said, we're not just going to give somebody a loan because they want to import something from Germany. We want to give somebody a loan because they're going to make something here and employ local people. So they had a different mindset in the 1950s and 60s after a brutal war. So they did fantastic. The German Landesbanken and cooperative banks are the same. So there's lots of examples of how to do it. Argentina, I don't know why it doesn't. If you're saying it doesn't have any financial cooperatives, then I'm surprised. You saying otherwise, or?
Yes. No, I want to tell you about, sorry, my English, a little bit about the financial cooperatives here in Argentina. I work in the area for 12 years. situation is a lose-lose situation because you have to run against inflation and you have to raise your interest rate. And when you raise your interest rate, you raise your write-offs and your default. And you have a situation where the investors sells dollars to buy pesos to give loans, and you have a situation of broken investors and over-indebted people. And so I believe this is not working at all. For both parties, it's not working. And I believe that also that it doesn't work ever for new investment or something like this. People, but it's work for needs, for special needs, specific needs. For example, you have a guy who has a truck who needs to work with the truck, and he blows the truck, and he has no credit card or no bank credit, and he can't stop working to earn money. In this situation, it's work, and there's a lot of people out that has no way to have access to the credit. So this continue working, but there's a limit of the interest rate that you can have related with the collection, the point of the collection.
Yeah.
When you find a vintage that you said, well, we're gonna charge you 300%, you're broken. That 300% was broken.
Let me just give you two examples then from Spain, because Spain has got two of the best banks in Spain. One is the Caja Laboral Popular in the Basque Country. Now that is a cooperative bank, it's a cooperative bank owned by the original cooperatives that were set up around Mondragon. Okay, you might have heard of the famous Mondragon experiment. So the CLP is a fantastic bank. It supports new cooperatives mainly, and they have an extremely good success rate. You know, only a handful of businesses in 50 years have ever failed, because they do due diligence, they put business plans together, they train the workers. When you're starting a business, it takes 2 or 3 years before you launch the business, because they don't want to make a mistake. So that's a fantastic model. That's a cooperative bank model, and it works. Now, people say, but that's specific. Maybe Basque culture means it won't work anywhere else. Well, they came from Almeria province in the 70s, because Almeria was extremely poor. And they said, we've got to do something about it. They looked at the Mondragon model, they went back and they formed Cajamar. And now we call it the Almeria Miracle. The Cajamar became the Community Development Bank. It's a cooperative bank, and it supported mainly the farmers who were members of the agricultural cooperatives, mainly lemons, oranges, things like that. And they call it now the Almeria Miracle. And so what was important about Cajamar is that the culture in that part of Spain was quite different from the Basque culture, so they tweaked it and changed it a little bit, but they came up with a model of a community bank, cooperative bank, that worked for their region. And so the idea is that...
Public funds or just private funds?
No, they found, as I understand, it was founded by cooperative funds, by the savers putting money in. So they mobilized savings. It was partly because the local government wasn't doing anything that people said, if the local government won't do anything, damn it, we'll have to do something. And that was why Caja Laboral was formed in the Basque region, because Madrid, as you probably know the history more than I do, but Madrid was very much against the Basques. So they said, we're not helping you at all. And so they said, we're going to have to do it ourselves. So they basically solicited money from the community to put the bank, to set the bank up. And then people saved in the bank, they had money, and then they could start investing in businesses locally. So the state had no real participation.
Another thing I have found here, and probably in other places, that the agricultural places or the countryside places is not the same in people culture or work that in big cities.
Okay.
So it works better. The traditional society basically works better than in a big city.
No, cooperative banks, credit unions don't work everywhere. That's just the way it is. But if they do work, they are a much better way of allocating finance than some of the other types that we've talked about. So that's really what's required. You need to mobilize finance, and then that's one part of it. And then you need to make sure that that money is used in a way which grows the local economy. If you're a private entrepreneur, you're not really bothered so much how the local economy grows. but making your money. And now with the latest venture capital-backed money for things like fintechs, they have got a 5-year window. They want to be out in 5 years. And usually they want to make 500% profit. So the pressure on you is to just get clients. And I've seen this in Cambodia because then all of the original microfinance institutions have now been bought out by big banks from Japan and China and Taiwan. And of course, when they buy it, the first thing they say is, right, this is great, and we think there's a big market for more microcredit in Cambodia. We're going to double the amount that we're pumping out there. And you're looking at the over-indebtedness figures, and you're thinking, my God, you know, this is absolutely crazy. But they have to do that because if they're buying a new microfinance institution for $150 million and they want to sell it in 5 years for $600 million, you have to build it big. You know, regardless of the eventual impact on the local economy, you've got to go big. And so the incentive structures in these particular institutions are all wrong in terms of local development. As we know from Wall Street, I mean, the incentive structures were horrendous, and that's why they nearly blew up the world economy. I might do again because nothing really has changed.
So, having a conclusion over your thoughts, I think you may agree with is not the problem with the access to financing, but whether the KYC and the CDD you would do over your clients in order to understand if they are investing somewhere profitable.
Yeah.
Okay.
Yeah.
I think that maybe not the very approach of the final vintage. I think maybe, I don't know, cases like Voila or enterprises in Argentina that works like vintage or art vintage in a way. And I think they have a little more, or a little way to know the customers. You can open an account with a selfie and a photo of you CDI, and I don't know how that can erase the problem or attend the problem that you mentioned about that you are giving money to people that maybe or maybe not do not how to handle.
But they score the people.
Like Gnosis.
With Gnosis.
Yeah, but you see the problem. There's a problem there as well. I mean, whenever there's been over-indebtedness, then microfinance advocates will say, well, you know what we need? We need to bring back, more concern and credit score and take care of the customers. But that's just meaningless words because the whole point of a lot of the microfinance institutions is rapid growth. And so your individual loan officers have 200, then 500 clients, and then 1,000. They have no opportunity to make an assessment other than simply stamp it like that, next, stamp it next. That's the whole commercial logic of it. And so saying that somehow we should sit down and we should evaluate their business plan for a $200 loan, I mean, nowhere have I ever seen where it happened.
It is the things he mentioned about scoring. Scoring is available for people within the banking system. Therefore, the vintage, the biggest companies of vintage is not appointing, or it's not pointing to the people that belong to banking system, but exclusively or more intended to approach to the people that is not into the banking system. So I think the scoring is not relevant here, but in the other way, I think we shouldn't have to cancel the vintage. We should enhance the vintage or the microfinance, but with a perspective of the government getting in the business or a way to regulate that, because we can't just do like, okay, there is a problem, we want to deal with microfinance. We should attend to people that is having a problem to access to microfinance.
Well, I agree that people need small amounts of money. But as I've been saying, I mean, there are different ways of delivering that. If you deliver it, let's say, through a credit union, then it can be done in a responsible way. The incentive structure is generally pushing towards responsibility. Or you can do it through a more entrepreneur-driven way, where somebody has got venture capital and they have to have a 500% return in 5 years, and so they have to bring in as many customers as possible. And you can set the interest rates quite high, so that even if 20% don't repay and get into debt and have problems, It doesn't matter, because you're making so much money on the ones that pay, that you don't care about those ones that, that don't pay and have family problems and all stuff. That's the business model now. When you look at, I mean, there's a reason why, for example, Banco Compartamos was charging 195%. They had a lot of defaults, but they didn't care, because if you're making 195%, you allocate 20% of that for a fund to pay for all the defaults. Who cares what happens as a result of the defaults, whether people lose houses, commit suicide, or not your problem, not your problem. As long as it's covered, you're not interested. So I think the key thing is the incentive structures of the institutions that are giving the finance. That's where I think we've got to work.
So would you agree that the only way of getting a responsible allocation would be a governmental intervention?
No, I mean...
Because I don't see it that way.
No, I don't. I mean, that's not what I've been saying. I've been saying that there are different community-based financial institutions that might be owned by groups of people, might be owned by the community. There are groups that have done that. There are banks that are owned by the municipality that have done well. So there's lots of different ways of doing it.
In order to make that groups, I think you need educated people. So we have structural poverty in Argentina, and the levels of education are really low. So
It's a problem. But Colombia has similar problems with the result of their narco wars, and they were able, in certain parts of Colombia, to set up financial cooperatives. It was one of the few institutions when there was the problems with the Americans coming in with the CIA, fighting locally, all that. One of the few things, in a sense, the Americans would allow the priests to do, or the community organizers, was to set up a financial cooperative. And they said, okay, you can do that. Anything else we'll block. So that's the reason why in all the war regions, in the provinces in Colombia, they have really good working financial cooperatives. It's really quite bizarre. But they have, in these cities, in the war regions, they have these. And these are regions that have been trashed, and they have schools have been just horrendous, but they work. So I think education is a problem, but also there's motivation. If you're motivated to work and train, and you have some ideology of working together, they have done interesting things there. Now, maybe there's a lesson there for Argentina if it's going through similar types of problems that they had in the 1960s and 70s.
I'm not similar, because we have a lack of credit. Here in Argentina, we only have the 14% of the GDP in credit. It's 14%. 14. Yeah. We need a lot of companies that lend money.
But I didn't put the slide in this one, but I did in the earlier one, because there was a great a slide that came out of the UN, and it's what the most profitable banks in the world. And so you had sort of the Americans then, and there was like a graphic, and right up here was Argentina.
Yes.
So how are they the most profitable banks in the world? What's their business? And I looked into it a bit more. The banks here are not interested in business. They buy the bonds from the government.
This is a
so that's a choice. And I was astounded. And I thought, wow. It was the graph was going up and up and up, and then all of a sudden it went like this, and I looked at Argentina. Wow! So banks have got money.
It's not an option.
No, but that means they've got money, and it's a way that you use it. Now, if you look at China or Vietnam or other countries, they are mandated to invest their funds in certain areas of industry, biotech, solar power. You might say, well, that's state intervention. I don't like that. But it works, if you mandate certain areas where the money has to go in. There are ways of doing it. You don't have to nationalise the banks, or maybe you have to nationalise the banks and have them, becoming a proper development bank.
But you have 40% of the people out of the banking system. That's the way that this is other channels. This is very difficult to manage the collection.
Yeah.
Problem in these cases. And another thing I want to tell you that Argentina is one of the highest regulation systems on the secondary system, financial system in the world. Yes.
The issue
It's
is that
terrible. Month by month, you have a new revelation from the last 10 years.
Yeah, but that's what
the legal system is.
I don't think.
Yeah.
I would like to.
Any final questions before?
Yeah.
Or,
Yeah, right. I think we are.
Somebody wants to ask a question, maybe, or
Does anyone has any more question? But if not, I would like to do a last question in order to close this, because the idea of my project here is, as we said before, we believe that the aim of the universities is to turn on all the lights. The green, the red, and the yellow light of different phenomena, like to put all the cards over the table. The people that, like us, like me, that believe in this, we see the finance as a phenomenon that is pretty much unstoppable. There are just 28 giant financial corporations that have assets for more than the 70% of the global GDP. So the world is finance. We have, in my opinion, two options. Destroy the system or have a new one, or try to turn this river, this unstoppable river, to any other place. So, from you, Milford, who are an expert in the red light of this phenomenon, and we have people here that work in the government, that work in NGOs, that work in fintech. What advice would you give to them that are daily working in this, and you cannot say quit? What advice will you tell to them?
That's putting me in a difficult position. I've given an analysis of the financial system and what the problems are. I do agree that evolution is possible, and if you're in a financial institution, as some of the work I'm doing, I'm working with some, trying to advise on setting up particular types of financial inclusion, or particular types of financial institution. So it's to, in a sense, learn what's going on, and then try to be part of the change, it's an old one, but be part of the solution and not part of the problem. There's lots of problems, I'm going to Cuba in a couple of weeks. They're setting up a diploma in local economic development at the university. One of the issues is finance, because they just have a big bank, and we have said that that's not good for SMEs. You can't have a big in Havana for the whole country. They'll have to start thinking about local financial institutions. So I'm really excited about going there to discuss what do they mean. Is it going to be a municipal development bank, or a credit union, financial co-ops, a private bank, or whatever? So, there's lots of change happening. And I think after 2008, when we realized the sort of Wall Street financial structure doesn't work, and that has just destroyed so much value, and we're still particularly where I live in the Balkans, but even here, we're still going through, we still haven't recovered from that shock. And as a lot of people are writing about, it looks like we're going to have another one because another crisis is coming, because we never fixed the roof after the last storm we had on Wall Street. So I think finance is now becoming huge, and I think a lot of countries are now looking to try to restructure in different ways. So I think read around and look at it. It's interesting to me, I'm fascinated how some countries are doing the changes, how other countries aren't, why they're not. I think finance is really important. This last epoch we've gone through since about the 80s, it's called the era of financialization. Okay? Before that we were into maybe manufacturing services, now this is financialization. Financialization is really important, it's powerful, but if it's done wrong, as it was on Wall Street, you get the results. If it's done right, as in other countries, then maybe we can do it. And I would say that maybe Argentina can learn from other examples of what to do, but also what not to do, and maybe change things for the better.
I think that understanding your point of view and to read his books is very valuable, because just to understand the global phenomenon and the interests that are behind of the big global institution it is a must in order to turn this river to be more responsible. Just to give a little example, today we have the global microscope study from the economists.
Yes.
So Argentina was in 2016 in the number 44 of 55 emerging economies in terms of an environment to promote financial inclusion and microfinance. In 2018, and this year, today, we rise to the 7th position. What had happened? What happened is that the economists put the fintech side of the situation in their ranking. So we dramatically come up. But there is a really interesting point in the document that has been published today, and is that we went from 9 last year to 7. Why? Because we opened the market for the fintech and did a lot of regulation in order to promote new startups. But the economists said that we are really bad in digital consumer protection. So that will be the question. Which is the weight of each variable in order to make you rise in this ranking or go down? Why the economist doesn't punish more if you do not have a good institution in order to give digital financial protection to the consumers, or not? Well, it's pretty much because of the things that Milford studied. There are huge interest, financial interest, in all of these global organizations. Even you spoke about the MasterCard net around the world.
Very scary.
And
we come up with all the fintech organizations in Africa, and then they all go through head office. So basically, they're going to be in charge of the financial transactions of most parts of Africa, which is really, really scary. The data they will collect, the ability to take a little bit of a tariff off each transaction, they can control it, they can start selling to people through their mobile phones. I mean, they called it the MasterCard net, and we were talking about you really need Arnold Schwarzenegger to combat the T-800 robot to come back and try and kill Skynet or MasterCard net before they develop the chip that allows them to do this. Whether it's going to happen, I don't know, but really scary stuff. I mean, that is one of the problems with fintech. It is extremely scary, the power and the control that they will have. Particularly a place like India, where they're pushing cash out of the way. Very soon you'll just have it on your mobile or a card, and then you have no control. They can put the price up, and you can't use cash. They can give you loans at crazy rates because nobody else will give you anything else. I mean, it really is a form of control that they are searching. And we've got examples already of what they do. There's been some horrendous scandals in South Africa when they basically, people were paid their social grant through an account, through a mobile fintech. And then they were bombarding them with advertisements to gamble, to take iTunes, to do this, to do that. And before you knew it, they were in debt, they were taking loans. They had to shut the whole thing down. And that's, in a sense, a warning that if fintech is ruled by commercial interests, that is what's going to happen without, as we were saying, extremely robust regulation, or else do it in a different way.
Well, hope you...
Sorry for being so negative, but, you call a spade a spade.
Thank you, Michael.